to help us make sense of the market's post-election mood and what it signals for investors moving forward. We're joined by Manny Ocampo, the Senior Managing Director of Investment and Capital Corporation. He's been closely tracking market sentiment throughout this midterm election cycle, and today he joins us to talk about policy signals, sector strategy, and what investors should be watching in the weeks ahead. Hi, Manny. Good to have you with us.
Morning, Mikey. Great to be here.
Hi, Manny. Okay, the PSE Index just posted one of its strongest sessions this year, right after the midterm vote. How much of that rally was driven by Wall Street's reaction to President Trump's tariff pause, and how much of it was local, tied to the peaceful and credible election we had here at home?
Well, I'll say that maybe the market reacted more about it was a 2,000 point uptick in the Dow Jones Monday night when we closed. So when we opened, I think the market was really cheering that. I guess there was also very positive reactions to, the initial news that came out. People were seeing a balance, for example, of the votes coming out, particularly for the senators. I guess a lot of sectors were pleasantly surprised. I'll maybe put it that way on the outcome, the initial outcome of the top 12 senators. So that definitely had some kind of a positive impact on the market as well, Mikey.
Positive, but short-lived. We are in the red right now, back at the 6,400 level. What's the mood in the market now following the elections?
Sure. I think we're still, this is consistent with what's happening in the States. We're tracking U.S. equity movements also. So, we're back there to track what, we're back to tracking Trump. Maybe that would be the right way of putting it. What is he planning to do next? And people react to that, react to that kind of actions from President Trump more than any other things. So, we've also had a release of corporate earnings for first quarter. I'll have to say, having taken a look at things, the sectors that we expected to be strong were indeed strong. There were surprises on the downside, unfortunately, for a few names coming out. So that has maybe tempered optimism in market movements, Mikey.
Yeah, okay. Drilling further into that, who would you say surprised to the upside and who surprised to the downside?
Well, Mondenisin on the downside, clearly, we thought that they, would have figured out putting behind, a few things that they may have made mistakes on. So that continues, which is unfortunate. And we hope that they are able to fix things on their side fairly soon. On the upside, I think the banks, the banks continue to do pretty well. Mining companies, mind you, have performed quite well. I guess with movements on the upside on commodity prices of gold and nickel.
Stepping back a bit, going back to our midterm elections as the 20th Congress takes shape, and also tying that into our market. When it comes to foreign participation, historically we've attracted opportunistic hedge funds, not the long-term institutional money. Given the composition of the Senate and the House, do you think that this time around they'll have the skill sets and the willpower to make the economic changes we need to really boost our capital markets?
Well, there are some new names that we hope would champion economic reforms. Unfortunately, quite a few will remain very political on outlook. But that's par for the course. But with the addition of some names there, it may be good for the economic side of things, Mikey.
Okay.
we're
Yeah.
hoping that sorry, I was going to say that we're hoping that maybe bills that got stuck with the previous Congress start to move forward. BIFITA, for example, is one of them. This rationalizes taxes on financial intermediation products and stuff. So, this is right now with the Senate. If that, with the new faces and all in Senate, we're hopeful that moves forward.
Taking a look at this list of Magic 12, Manny, who do you think here will champion, the causes we need to drive our markets?
Well, Mr. Aquino and Senator Aquino and I guess Senator Pangilinan should be front runners in that. They've always been known for being friendlier to business. So we hope that moves forward. Mr. Lacson, to be fair, has also been he's been quiet there on the sidelines in the past when he was senator, but he's pushed quite a few economic reform bills as well. Looking at the record.
Okay, let's focus on the economic legislative initiatives. What would you like to see, especially within the first 100 days, their first 100 days on the job?
Well, businesses always push for number one, the amendments to the Magna Carta for MSMEs. MSMEs being the acknowledged backbone, if you'd like, of the Philippine economy. The amendments would really, maybe push more credit to MSMEs, or maybe it's something that the BSP can push a little bit stronger with the banks to take a look at lending in more meaningful ways to the MSME sector. It's a sector that the banks may be less akin to lending to, because they're always playing it on the safe side. But so we'll see. There are quite a number of MSMEs that would do well, but are just not being given the opportunity.
And what about the decrease in the stock transaction tax from 0.6% to 0.1%? That's a proposal. Are you hopeful that within their first 100 days on the job that we might see this proposal push forward?
Yes, that's the low-hanging fruit, and that's passed quite a bit. I think it's really just waiting for confirmation, or even just the signature of the president. Now that the elections have been done, I guess they can put politics aside and move to the economics of things. The reduction in the stock transaction tax would definitely help the equity capital markets. That should provide. You're making you're taking down, or you're reducing the friction cost in trading, and that should spark some kind of volume activity in the market.
Yeah, absolutely. That's going to help beef up volume. However, you mentioned that you wanted them to put politics aside and move on to economics. However, up ahead, we've got the impeachment trial of Vice President Sara Duterte. Are you worried about this, that this will be the first focus, the first thing on the agenda? And it might be time consuming. How worried are you about the focus and the attention our lawmakers are putting into this instead of the economic policies, crafting the economic policies and pushing them forward?
They can look at that. That's par for the course in the Philippines. But what we hope will not happen is that the economics are not forgotten. It will be a pity, for them to focus on the impeachment. As we all know, life has to go on the other side. Not everybody is there, and maybe people are saying that this is I think you had guessed earlier in a previous show in BNC, but it may be a foregone conclusion already. So just get on with it, but don't forget the economics.
Right. Going back to the economics and that landscape, we saw a mixed picture of corporate earnings in the first half of the year. Add to that low inflation, lackluster GDP growth. Q1 GDP came in at 5.4%, below expectations. Growth was expected to be much higher. Apart from that, we've got rate cuts on the table by the BSP. What's your outlook for the second half, and what kind of an economic situation scenario are you looking at?
I think we're still optimistic now, given everything that has happened. If Mr. Trump doesn't controls himself, so we take away that uncertainty, for example, from the external. I think BSP, for example, will be looking at a rate cut in June, and then maybe at least one more before the year ends. So that should be positive as far as maybe helping the economy, move forward, and hopefully you'll have a GDP recovery towards the second half of the year. That's there also. With rates going down, definitely a few sectors in the capital markets should benefit. My favorite asset class would be REITs, and a rate cut would again be a boost to that particular asset.
Yeah, Manny, speaking of those rate cuts, you said you expect two more rate cuts this second half of the year. Would that be 25 basis points each? What's your take on that?
Yes, I think BSP will, maybe they will not do a preemptive 50 basis point rate cut at any given time. Governor Remolona will be very controlled and see how he'll do it in controlled cuts.
All right, so 25 basis point rate cuts for the balance of the year. Do you think with that, the PSE index, we are at 64.90 right now. Do you think that with those rate cuts, those 25 basis point rate cuts, do you think that we'll be able to breach 7,000? Of course, the Trump risk thing, for as long as he doesn't do anything that makes global markets go crazy, do you think that with these rate cuts by the BSP, do you think that'll be enough to bring us to the 7,000 level?
Sure, and at 7,000, we're really aligning valuations with our neighbors. So it's not, it's not a big thing. We're still playing catch up relative to our neighbors. Yes, we were very optimistic that 7,000 or 68 to 7,000 is a possible range that the index will go towards fourth quarter.
Mm-hmm. What's your base case for the PSE index in the second half of the year?
Maybe if we settle at above 6,700, 6,800, then we should be on path to 7,000.
Okay, all right.
We're a few points away from that, a few hundred points away from that.
Okay.
Yeah.
Yeah.
I was going to say second quarter we're a little bit more optimistic. Yeah.
All right. For the people very much invested in fixed income, what would you like to say to them to entice them to get back into the equity market so that we could see some more volume and some more action and some more upside?
Sure. When rates come down, then you lose a bit of return on fixed income. That'll become a little bit more pronounced, as you go along the way, especially with rate cut expectations. So it may be time to start looking at, the blue chip issues or the blue chip stocks that maybe you felt were expensive in the past. Now would be the time to start accumulating. Slow accumulation. Don't be too aggressive. Don't sell the whole fixed income portfolio yet. But start taking a look at at the blue chips again. REITs, sorry, I'm a big fan of REITs, but REITs give you a very good play on capital appreciation and fixed income returns. That's an asset class one should really be invested in at this point in time as well.
All right. Thank you so much, Manny Ocampo, Senior Managing Director for Investment and Capital Corporation. That's all the time we have, but always good to hear your thoughts.
Thank you, Mikey.